Hello, everyone. Simon is here with AvaTrade. Happy Sunday. I hope you're enjoying your weekend. And we're starting our weekly trading plan webinar. And I want to welcome everyone. And of course, special welcome to new people. And for you who are new, it's very simple. The title says it all, your weekly trading plan. What we're trying to do is make a plan. And as I always say, and I keep on saying it, as a lot of traders like to say, you plan your trade, then you trade your plan. What it means that we're trying to get more organized, more structured, less spontaneous, and that could bring better results by being more organized and having a plan in trading. A few things about myself. My name is Simon Friedman, and I'm a senior account manager. I have overall experience of over 22 years. I started in June of 2000 as a proprietary trader in New York City, and I worked for 11 years in 3 different firms as a proprietary trader. And after 11 years, I moved on, trading differently, starting to mentoring and educating other traders. And currently, I'm working as a senior account manager with AvaTrade, and I love doing that, trying to help customers that I work with to share with them my experience and to guide them within the structure of the company and try to help them improve their trading skills. And that's the agenda of the webinar. We're trying to do the same thing pretty much every week. We speak about indices, stocks, commodities, FX. We'll talk a little bit about a global picture, what's happening globally and the economy. We go through economic calendar, and then we go to the charts, trying to see what could be possible scenarios for the upcoming week. And of course, these are our channels that you can be in touch with us and get very useful information from. You have Telegram, you have Twitter, and my favorite YouTube channel that if you miss any of the webinars that we offer, you can find them recorded on YouTube. I know a lot of you watch them on YouTube. The reason being that you're not able to catch the live webinar. And besides that, you have a lot of tutorials, tons of educational material, and I highly recommend subscribing to it. And you can share it with your friends. You can also click on that bell so be notified when new things coming in. And the risk warning, very important. You can find a full document at AvaTrade. Just to keep in mind that everything we do here, it's purely educational. Few things, we'll try to talk a little bit about what's happening globally. And this is the picture. I like to bring some pictures just to make things more fun. And it says right here, this is from MarketWatch, and it says Black Friday can offer investors clues about how much gas consumers have left in the tank. And I'll talk about it in a moment. So let's just speak globally. The war is still going on, unfortunately. We have fear of recession, and it's being announced by a lot of brokerages and investors and so on, banks, everybody around, including the retailers. They're really warning of a recession coming next year. And we'll take a look at some instruments and see how they reacted to it. And this week is going to be very interesting. It's a short week. It's Thanksgiving Day on the Thursday, the 24th, and the market will be closed. The U.S. market will be closed on that day. And why am I showing this slide? And I'm just going to quote a paragraph from the MarketWatch, and the author is right here. It says Joseph Adinolfi, and it was published on the 19th. And I'm just quoting what it says. After a host of American retailers, including Walmart and Target, warned their shareholders about the waning strength of the American consumer, and most major investment banks warned about a looming recession in 2023. Investors are justified in wondering how much strength does the American consumer have left. Okay, now how's it connected to Black Friday? I lived in the States for around 20 years. I know the Black Friday, it's always the craziness because the stores, special electronics, they offer crazy savings and people are going really crazy over it. You've probably seen it a few times on television. People start physical fights trying to grab those last televisions and other things. So it is kind of crazy. But the idea is that it's being measured. So every year they measure how much the consumers spent on Thanksgiving Day. I'm sorry, on the Black Friday, which comes right after Thanksgiving. And that's kind of an indicator. And that's what it says right here is how much gas they have in the tank. That means how much spending power, how much certainty they have in spending, and so on, in a looming recession. So we'll be watching those numbers for sure. Okay, so that's, I really just wanted to bring that because that's a key day in a way. The Thanksgiving, of course, it's a nice holiday. Families get together. It's the most traveled day in the US, I believe. Everybody's traveling either by car or flying. Families are reuniting over turkey dinner. It's a nice holiday. So let's take a look at economic calendar next. And as I always say, especially for the new people, economic calendar, you can find it on the web trader, on the application that we have. Also, a lot of other sources offer it if you'd like. So what it means that certain things they schedule ahead of time. I like to do it every week on Sunday before the market opens, and I go through the calendar. I see what's relevant to things that I'm working with, and a lot of traders do that. Again, you might follow it. I know a lot of people that trade purely fundamentals. They know how to understand it, how to read it. I personally look at it as a nice addition to the technical analysis that I do. And definitely it's important to know, even if you're not using it, it's good to know that certain things are coming out, especially big announcements, big meetings, and so on, interest rate decisions, FOMC meetings that we have this week, interest rate decisions, as I said, or NFPs in the US, or especially during these days when all the central banks are trying to work hard to bring the inflation down. So inflation and numbers like CPI and PMI and so on, it's very, very important that you notice the numbers are there. Will you be using it or not? But in my case, I just like to know they're happening so I won't be caught off guard and by surprise. So again, here I take out only the high impact events. As you could see, it's in red. You can filter them. You can choose what you want to look at. Depends on what you trade, what part of the world market is, and so on. So that's something just to keep in mind. Now, Monday we have interest rate decision from China. As you know, China has been really working hard on fighting the slowdown in economy. So they've been lowering rates lately. We might see another lower rate on Monday as well, or anything could happen. So that's on Monday. Now, Tuesday we have the Bank of Australia governor speaking. Then we have retail sales from Canada on that day. Wednesday, monetary policy from New Zealand, followed by interest rate decision. Very important. And of course, the statement and an hour later press conference on that day. That's Wednesday, early morning. Now, I set up all these times in GMT time. You can match it to your local time or whatever works for you. I just wanted you to know that the times over here are GMT time. So Then we have PMI numbers from Germany. Then we have PMI numbers from European Union. We have PMI, service PMI from UK, durable goods from US. We have capital goods orders from US and the FOMC minutes from US, which is going to be very important. As you know, all these events are marked as high impact. And retail sales from New Zealand on Thursday. Again, Thursday, Thanksgiving Day, the market will be closed. And of course, you can refer to any information on the website if you're interested. Anytime, any holidays, any part of the world, you can just Google it and be prepared. Why? Because sometimes you have positions and you're hoping to have control that the specific day, and then you get surprised that it's a holiday and the market's closed and you can't really get out of your trades. So that's important that you be on top of things, and the more prepared you are and the more informed you are, the better decisions you can make. It doesn't, of course, guarantee the success, but it gives you more understanding of things. So that's the economic calendar. And let's move to the charts now, and then we try to make sense of things. So we move to the MT4. I'm going to be using MT5 as well now. Again, just to remind everyone, if you are trading stocks, especially US stocks or other stocks, the MT5 platform has a larger list of stocks available for trading. So I'm going to be using MT5 for stocks that I don't have on the MT4. And again, if you are focusing on trading stocks, just to remind you, these are the CFDs. If you're trading stocks, CFDs with us, MT5 has more variety to trade. Okay, so again, we'll start with indices, and let's start with China, see how things are going there. We started the week with the move higher, and then we moved lower, pretty much flat week. Nothing happened after we retested the 50 moving average and also retested the resistance. We confirmed that. Again, China is having a lot of issues with COVID, with everything else. And we didn't really manage to break the resistance as of now. And it looks like we are ranging between 12,100 and 12,600, about 500 points corridor or range or channel. So we'll be seeing this week what's happening. Of course, we have the interest rate decision, as we said, in China. It will definitely impact one way or another. As of now, we are in this tight channel after a nice recovery from the recent lows. Now, we'll take a look at the US indices, of course. S&P 500 this week tried to run high. We couldn't break the 4,000, around 4,000. We had a nice spike on the 15th. We went as high as 4,050.5, but we closed below this 4,000 mark. And on Friday, we did have a green day, the up day, but we didn't really close above the Thursday high. So we are within the previous day range. And again, FOMC might do something. What's FOMC? We'll probably hear some things, some details as far as monetary policy, and some ideas might be getting as far as what's next and what's the plan, what's the mood of the Fed going forward. So we'll be watching that. And again, it's going to be a short week, so it's going to be interesting to see what's happening. Now, NASDAQ is still the biggest, not the loser, but the weakest out of three US indices, the major indices. It's S&P 500, NASDAQ, and Dow Jones. So NASDAQ is the weakest. We did, again, the same thing. We tried to move higher. We faced the 100 moving average, rejected it, and we slid lower. But take a look at the weekly chart. It didn't really happen much. you can say it's pretty much almost a flat week. After the previous week, very nice move to the upside. We did close below the high of last week, so this past week didn't really follow that strength. So that's NASDAQ. The strongest one is Dow Jones. It's been really having a nice recovery. You can call it even a V recovery. It's very strong and fast recovery after this fall. So this level here that we had on the 16th of August, we dropped straight down to these levels here. The low was on the 3rd of October, and after that, with some struggling, we kept on moving higher. And this past week, as you could see, this spikes. We tried to break through this 34,000 level. We couldn't. I think we hit it here on the 15th. Yes, 34,024, but then we fell much lower. So we might actually, on Dow Jones, it looks very interesting. We might go and retest the 34,000 again. It depends on the news, and of course, as I mentioned to you, Black Friday is a big indication how the economy, how the consumers are doing. So we'll be seeing if we do break the 34,000, we might come and retest this high of August, and the high here was, as I said, 34,244. And the opposite scenario, the weakness prevails and the stocks in general and indices fall, so we might slide and look for support, and we might find some support either trying to really test the moving averages. This is the 200, the 100, and the 50, or we might have a little bit of support around here on 32,700. That's where a lot of actions and accumulation happened before this recent move in August. And let's see, again, it's important what's fundamentally happening. And let's see how price action is showing us either strength or weakness here. Now, DAX, also, it's similar. If you trade DAX and Dow Jones, you might find some similarity in dynamics. As you could see, it has a similar move higher, also a nice vertical recovery and trying to approach the levels. In this case, this is the June high, and we are approaching that level on DAX. And again, we'll see what happens fundamentally. And let's see if we are moving higher. We will have to see how this level around 14,600, how it plays out, and what's the price action showing us. We are above all the moving averages. And if you take a look at the weekly chart, we are approaching this level that I just mentioned. And there was a lot of actions here. There was a resistance, few times we really tried, and then we failed to move higher. So we might try it again this time. And let's see, we might break through it and go retest higher levels. For that, we need to see a breakthrough this, at least on the daily chart, and some build up on the top of this level. So we might consider that we are building the support with the intention of moving higher. Let's take a look at Nikkei. On the weekly chart, this is really a heavy area. As you could see here, a lot of actions. We had support, then we had resistance, then we just had to move up and down here, and then we back to this level again to retest that we're currently at this level around 28,200. And we are, it looks like we are having this support with the spikes to break below this level. We're having a hard time, but at the same time, we couldn't break. So the range is getting tighter, as you could see here. That means there's certain accumulations happening. And again, you know, we don't need to guess. We just see what happens next. It's either we break through the bottom of this level at 27,600, 27,860, and start building a resistance, or we might run above the 28,218. again, the numbers that I mentioned, those are approximate numbers. I just draw the levels based on the previous price action. So don't take it as a specific precise number. So again, if we break about 28,200 and start building support here, we might have a nice run and retest the previous highs. So that's as far as indices. Now another one, just want to show the Nifty. The Nifty, we've been watching it lately, and it's been, I guess, the strongest index. It's been really showing a lot of strength, and we did break about this strong resistance of 18,219, and we've been holding about it. So it does look like we're building a very nice series support here, and we might continue higher. Again, it depends what a global market is doing and everything else. Or of course, the opposite scenario, maybe this is accumulation and take profit before going into correction to the downside. We're far from all the moving averages, so there is a possibility on the weakness of the market. And as I mentioned to you, there's a fear of recession, especially US, and a global recession as well, as everybody are suffering with high inflation, which is the biggest problem that all the central banks and countries are fighting or struggling with. So again, if we continue keeping above this level, we might move higher. The opposite scenario might break down and start building resistance, and that would mean a nice correction to the downside on Nifty. From last week, I would like to bring a few things from last week discussion that we had. We spoke about Nvidia and we spoke about Cisco. So let's take a look at those guys. I'll show you Cisco over here. Cisco had nice earnings. The stock moved higher nicely with gaps, and we did hit the 200 moving average over here. Now the question, what's next? With this level, it looks like we are fighting the 200 moving average, and if we do continue to the upside here, we might go higher, retest the beginning of this move, and the high here was 49.94, almost 50. We almost hit 50 before falling and making a lower low. So again, it depends, of course, what the investors are thinking, what the traders are thinking about this individual stock, and definitely it depends what the general market conditions are. So if the market is strong, this move can continue. It was pretty aggressive. We gapped and moved higher, and then the next day we gapped again and moved higher. So we'll be watching Cisco. Now I want to bring the MT5 for a second and show you Nvidia. Nvidia didn't do that great. The revenue fall, and the stock after this recent move higher, it's trying to find the support after falling lower. So we are approaching 100 moving average here on Nvidia. As you could see, the chart, it doesn't look that solid. It's very choppy with a lot of spikes, like the whole market is. So again, simply put, we might retest the 100 moving average over here. We are very close to it, and again, we might just fall through it and go to 50. We might build support and move higher, and in that case, we would retest these highs on the announcement and continue in that direction. And this week's earnings, we have a lot of earnings this week. I just brought a few things for you. The HPQ, the Hewlett Packard, the stock's been strong, maybe into the earnings. Let's take a look at the weekly chart. But a very strong move. 1, 2, 3, 4, 5, 6, 7 weeks, 7 or 8 weeks to the upside. We're about all the moving averages. In general, the tech companies have been suffering a lot, and this is mostly a hardware company making computers and other things. So let's see what the news are showing. They're reporting on the 22nd after the market close. Okay, so that's HPQ. Then we have BIDU, the Chinese company. They are reporting on the same day before the market on the 22nd. And if you remember, we spoke about Alibaba. The stock did okay or positive last time. Let's just take a look really quickly. And as you know, with all the China really struggling, the Chinese stocks trying to recover a little bit of it. I'm just trying to find it. Okay, Alibaba. Alibaba did great, I guess, on earnings. Not so great, but it stayed positive, had a nice move to the upside. So BIDU could actually have that effect already, but it already moved, of course, in sympathy with Alibaba, and it faced resistance around 100, and then moved lower below the 100 mark, and then on Thursday tried to recover again. We hit the high of 99.78, a little bit shy of 100, and then Friday was a little bit flat. So let's see what the earnings are doing. That's again on the 22nd before the market. And another one is Dollar Tree. I believe that's the retail stock. It's been also trying to recover here after this tremendous fall. And we start making, as you could see, higher lows and the higher highs. And it looks like there's accumulation happening within this range between 107 and 113. And it reports on the same day, on the 22nd, before the market, together with BIDU. So those two stocks I wanted to show you. And let's move to commodities. I'm gonna go back to MT4. And I would like to start with actually with oil. For those of you that trade oil, of course, you saw that strong weakness. Sounds funny. Weakness in oil, and the big drop happened here on the 17th, and the oil fell 4.6%. And I did some research. It looks like it's the biggest decline since September. And then next day continued lower, and then we hit actually a very low level on Friday. We hit 77 and a quarter, 77.22, and ended up closing a little bit above 80. So 80 is the key number here. Again, a lot of things is to do with recession fear. As you know, any economy in China, US, big economies, if the slowdown comes, if recession comes, there's going to be less activity, it's going to be less production, definitely less usage of oil products. It's going to be less deliveries. I'm just trying to speculate here. It's very simple. When the economy is booming, everybody's happy, including the suppliers and everything else. When the economy is slowing, everybody's suffering. So in this case, if recession comes again, some already say, some analysts say we're already in recession. So it's hard to really say yes or no. I'm not here to make that determination. So the fact is the oil is falling, and first thing comes to mind, the two oil stocks, and that's I just want to bring them up. So far, they didn't really react with oil in a strong way. So you have Exxon Mobil. It's really holding to this recent gains. The stock's been strong. We've been talking with you for a while about it since earnings came very strong. So the stock is really holding all this move to the upside. And Chevron, same thing. Two stocks are very strong, but oil moved tremendously to the downside. And it would be logical to expect these two stocks to really at some point react and maybe sell off into the weakness of the oil. So again, Exxon Mobil and Chevron to watch on a possible sell-off on the weakness of the oil. Natural gas, it's hard to say anything. Like I mentioned all the time, it's a lot of fundamentals. The weather predictions, the situation with Russia-Ukraine war, with Europe using or not using natural gas from Russia, a lot of unknown, a lot of things that we can't really predict or control. So natural gas has been really, again, just to remind you, all this move down was on speculation that it's going to be a warm winter, and then we moved up on saying no, it's going to be chilly, and then we sold out again, I guess, on the fears the economy slowing down, that we moved up. A lot of choppy trading. I know a lot of traders are trading, they're finding the way of trading natural gas, and we'll see what happens, what fundamentals are bringing. Now, that's as far as oil and natural gas. Gold had a nice run until the last 3 sessions. Very nice run. This is daily chart. We came from retesting 1621. If you remember, I mentioned that level. We had the channel between 1621 and 1691. Then we broke through it, and then we had a nice vertical move to the upside. And the moment we hit the 200 moving average, again, I didn't invent it. A lot of analysts are using these 3 averages, the 50, 100, and 200, for their kind of reference points, possible levels at those moving averages. So we did hit the 200 moving average. We closed here on the 15th, right on it. Next day we went lower, and next day again, and the following day again. So we had the 3 consecutive days to the downside. We went below again, we are below the 200 moving average. And if gold continues sliding, a few things can happen. We can come retest this level here around 1720, 1730. And if we do break that level to the downside, we might see and retest the 100 moving average and continuing further. Now, if we are moving higher, we might be facing again strong resistance on the 200 moving average, which is currently around, let me see, around 1777. So let's see what happens. Of course, it depends on a lot of things, what the economy is doing, what the dollar index or the dollar, strength of a dollar or the weakness of a dollar. And we'll be seeing what's happening this week. So copper also has been selling after this strong recovery here. And similar idea, take a look. We did break about the 200 moving average by the flat day, I guess that's Sunday night. And then we just went straight down 1, 2, 3, 4, 5. The whole week we're going down from $4. I think we did hit $4. No, $3.95. From $3.95 all the way to $3.62. So again, we might continue lower and retest this 360, 359, 350, 358 area, or we might break even lower and try to retest the next moving averages here. And if we are reversing here, 2 things. The 370 remains the level, as you know here. We had resistance, 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 and then we broke through it, came right back into our channel. So 370 might be retested if we are turning back to the upside. And of course, the 200 moving average might be retested after that. So that's as far as copper. Now, few more commodities that I want to show you. Sugar first. Last time or the time before I showed you coffee, then sugar. Now it's going to be the opposite, trying to really make it more fun. So let's see, what is my sugar? Okay, sugar had a nice run and it really continued into the 15th. And take a look. We did hit this level of resistance here, around 20.40 was the level here. High of 20.43, and with the high here of 20.46. By 3 cents, we broke this level, and the following day we gap down and continued lower. And Friday we tried to recover. It was a nice recovery, but we still closed within the previous day. So as of now, it's a nice range here between this level here from which we started the Friday move around 19.58, and the high of this past week, as I said, 20.43 or 20.46. Okay, so it's about $1.10 channel. We might be really ranging here for a moment, or if we do break through this 1958, that would open the space for continuation to the downside and maybe retesting the moving average. Or the opposite, if we move higher, we might go and retest again this 20.46, this past week's high. And coffee is going to be the last one we'll be talking about. Take a look. It looks very, very interesting. We tried to reverse here just to show you the history, and it didn't happen. We continue lower and get ready for this. Few things. We are approaching the strong level of support. This is the weekly chart. So the move started right here at 150, 150.05. And the moving average is $1 lower. So we're coming to a possible strong support here. As you could see, after breaking through this 149.80, we had a lot of actions here. We moved higher, refused to continue, then retested, really strong floor. I like to call it floor or a ceiling, that support and resistance. So this floor or support really held nicely, and we made a nice move to the upside the very next day, and the move continued for a while. So we are on the way down to retest this level. Maybe, again, maybe, it doesn't mean even if this floor sometimes being broken. So the support could be broken, but there is a possibility that we'll hold again around 149.80. And let's see if that holds. And the next one is 200 moving average. So maybe by the time we hit there, they're both going to be around the same level. So between 149 and 150, around those numbers, we might see a strong support, and that's still can go again. You might not even go there. You might just reverse before that. But in case it does move lower, a lot of traders are possibly going to be looking for buying opportunities there. So that's as far as coffee. That's it with commodities. We'll move to Forex, and we start with dollar index. Dollar index, as you could see, it's been suffering a little bit. Dollar's been really weak in the past week, and it was pretty heavy. The selling was heavy, and then Friday we actually touched this level of 105.42, and that's where this recent higher high started. As you could see here, 105.42. I marked this level. We did touch it to the downside on Friday, but it had a nice recovery right after that. So let's see what this week brings. A few things. We might actually try to hit this level again to see really if it remains strong as a support and then continue higher. Or also the opposite scenario, we might actually break through it and start building resistance. Also a possibility. And in this case, we could slide lower and go retest maybe a 50 moving average, or even a lower possible, or that's probably actually higher. So the high here was 103.80. So we might, if we do break this recent support around 105.42, we might move lower and retest this previous resistance and see if that becomes support at this point. And of course, the 50 moving average is right after that. So we'll see what the dollar index is doing. And of course, if you take a look at all the major currencies, currency pairs, they actually showed the similar idea. They showed that we're really approaching a strong level. So let's just go one by one. We'll start with euro dollar. As you could see, We did have a nice recovery. Remember, we were low, and then we were fighting the parity. And the previous week we had a very nice move to the upside, and this week that just ended, we really finished flat. The open was 103.26. The close was 103.19. At 7 pips lower than the open. The whole week, a lot of actions, and we closed flat. So as you could see on daily chart, we're really fighting this level of 103.50. So that's on euro. I just want to illustrate kind of a support of what we're saying on dollar index, that we might be getting closer to that support and possible reversal, continuation to the upside, or sliding lower. So this level is very serious. If you take a look at the pound, similar idea here. We did break through this level of resistance that we faced until we broke to the downside, and it looks like we broke through it. We broke through this to the upside, 118.26, around that area, 119, between 118 and 119. We tried to hit 120. Let's say if we did. Yes, we did. 120.27. That was on the 15th, but we failed to continue. And it looks like we're holding this 118.21, 19 level. Again, let's see what dollar is doing. Let's see, of course, what the pound is doing. And if this continues here, we might move higher, but we did fail to make a breakthrough 120. And one of the reasons, again, technical, as I said, a lot of traders are looking into it. A lot of big houses are looking into it as an indication. We couldn't break the 200 moving average here. So we are between the support and the 200 moving average. Let's see what's happening next. New Zealand dollar, also very nicely showing a strong level of resistance after this nice recovery that we saw from the recent lows. We did reach the 161.57 area. That's the resistance here. Take a look. 0.6156, 0.6160. We hit it. We had few spikes, but we couldn't really continue about this level. So possible correction to the downside, maybe into 100 moving average over here. And Australian dollars, take a look. Similar idea. We're already below the level. We broke through this on the 15th. Then the last long next day we had a down day, and the following day we back below that level, and Friday as well. USDCAD bouncing off 100 moving average. Of course, a lot of it to do with the weakness of the oil. And again, for new people that wondering why am I mentioning oil in this case, Canadian dollar is very sensitive to the oil prices, as Canada is one of the producers of the oil. So as oil is going higher, Canadian dollar is getting higher, and the opposite. So in this case, oil sold out as we saw here, and Canadian dollar got weaker as well. So USDCAD got stronger after holding this support around 132.70, and on Friday we closed higher. So again, if dollar remains strong or becomes stronger and oil continues to be weak, we might see a continuation to the upside in this pair on USDCAD. Of course, USDJPY, it's been really acting strangely after the sell-off. Of course, the weakness of the dollar, we've been really sitting in this tight range. So we have a support. If you take this low here, 138.46, let's say 138.50, and we might move higher over here if dollar gets strength. And we have some announcement from Japan this week. If you take a look at the economic calendar, so certain things might play a role in this. And another thing that comes to mind is, as you could see here, this was the recent intervention. As you remember, we spoke about it. The Bank of Japan had two interventions. One was here on the 22nd of September, and one was here on the 21st of October. As you could see here, this level was a support. As you could see here, it became support, confirmed the support on the intervention day, and then we broke below that level on the recent weakness of the dollar, and it looks like we're having a hard time breaking above again. So maybe this support has become a resistance, and that means that there's a possibility of continuation to the downside in this instrument. And of course, if we are going above that level again, 140.39 or 140.50, and start building a nice support price action, we might continue to the upside and retest the 100 moving average and the 50 moving average after that. And the last pair, I'm going to bring out this dollar Swiss. Yeah, I think it suffered the most recently. The dollar suffered the most against the Swiss franc. We just came back to the level of mid-August, and it was a very quick move. As you could see, in a few days, probably 2 weeks, no, 1 week. That the whole move took 1 week. Looks like it. Tremendous fall. We did hold this level that I think I mentioned last week to you. We did hold this level around 0.94, let's say. And this week, it's been, even on continuation of the weakness of the dollar, it's been recovering here and taking back some of these losses. And we are facing a resistance, or at least this recent resistance. As you could see, support, resistance, support, back to resistance, 0.95.5 around that area. So we'll be watching that. If dollar gets stronger again in general, and we start building above this level of 0.9550, we might continue in this recovery, maybe hitting the 200 moving average at least. If the opposite happens, we might be channeling for a while and maybe go and retest the lows of this channel around 0.94. So that's as far as Swiss franc. And let's just take a look at cryptos. Again, the craziness around the cryptos, the FTX, new facts are coming. They just took the money out before claiming bankruptcy. A lot of things. I'm not going to go into details. If you're interested, there's a lot of things on the internet available. But as you could see, the major cryptos are really not doing much after this recent sell-off. We're sitting right at 16,000, around 16,000 and a half on Bitcoin, and Ethereum also. Similar idea after the sell-off, that not a lot of signs of people rushing in and buying things. Basically, all these crypto things, again, there's a lot of positive things. I'm sure people finding in it, but recently there was a lot of uncertainty. People are just withdrawing their money, and I think that maybe that was part of the issue as well, that they just couldn't recover those withdrawals, and the fact of lack of money just came out. If you're interested, you can research that thing. But in any event, it shows tremendous weakness over here. And as you remember, I mentioned a few weeks ago on all these things that that excitement or rush to run into cryptos kind of disappeared, or at least became weaker. So that's as far as cryptos. That's it, guys, pretty much. I would like to take this opportunity and thank everyone for participating. And for new people, I hope this was useful for you and practical. And also, I wanted to announce, it does sound like a self-promotion, but I don't think it's about me. I'm doing these webinars for the company. And I started a new series of the webinars. They are taking place on Wednesday. I know some of you might receive mailing from the company. The webinar called the round trading table, and it takes place every Wednesday. I believe it's 4 p.m. GMT. And the beauty of that, and that was my idea in a way, that we can get together and throw in questions like, what do you think about this instrument or that instrument, or, you know, and then we'll discuss as a group. We'll take a look at the chart and try to make sense what's different. It's not just things that I prepare and talk about. It's totally creative, and it's totally open to discussion, and everybody can come in and have specific questions and get answers to that. So I invite you to that webinar. If you'd like, you can sign up for it. You can find information on the website, or as I said, I think every Monday you're receiving a list of the webinars for the upcoming week. Again, thank you all, and enjoy the weekend. Get ready for the week of trading. I wish everyone lots of success and all the best. Take care. See you next week.